When you're looking for insurance quotes, you have many choices to make, from the coverage amount to the length of time you want that coverage for to what it is that you want to insure. Whether it's a car, a house, people, pets, it's going to cost you something to protect it. And that something is known as premium in the insurance world. Insurance companies determine the premium amount based on a series of very boring statistical data that allows them to calculate the risk that they're taking. Now, you can't really determine for the insurance company how they quantify the risk that they're assuming on yourself. But you can definitely choose how much it's going to cost you. Want to know how? Stay with me here. My name is Emmelis Keaney. My channel brings you crucial information so you can make sound financial decisions regarding insurance. And by the way, you should click on that subscribe button right about now. In this episode of Keaney Desk Talks, I'm going to give you tips and ideas of how to possibly reduce your premium cost with different insurances. Car insurance is one of the most typical coverages out there, and it's also one of the very first ones that people get. Now, auto insurance is not my expertise, but I do have a car and it's insured. And throughout the years, I've been able to take advantage of certain ideas and do certain things that have helped me reduce my premium costs. And it might help you too. Like, for example, sometimes insurance companies will give you a break or a discount if you have more than one type of insurance with them. Like, for instance, having homeowners insurance and auto insurance with one company. At the same time, if you have more than one vehicle in the household, insuring them all with one insurance company can also help reduce your premium cost. Now, if you're still working towards your first home, or you don't have more than one vehicle and you still want to know how can I improve or reduce my cost of insurance, well, consider something as basic as maintaining or improving your credit score. And you may think, why does the insurance company care about my credit score? It has to do with the fact that studies show that people who are responsible in their personal life tend to file less claims. Well, I don't know if that's true or not. However, it's an overall good practice to have a good credit score. And if you're trying to figure out your financial life, consider these simple things that can help you improve your credit score, such as paying your bills on time, not letting debt accumulate, and paying more than the minimum payment on your credit cards. All those things can help improve and keep your credit score high. Also, larger cars cost more to insure. And some insurance companies these days will give you a discount if you drive a hybrid or a fuel alternative vehicle. So not only will you be happy about protecting the environment, but it may actually save you a couple of bucks. Companies like loyalty as well. So if you've been with an insurance company for a long time and you needed new coverage, that company may actually give you a discount as a thank you for your continued loyalty to them. Now, that's not the case with everybody, and I do encourage people to shop around for rates, but start with the company you already know and you have experience with. If you have any tips or ideas or a story of how maybe you were able to reduce your insurance costs, make sure you put it in the comments section and share it with everybody. Life insurance is another popular coverage that people are always looking for. It is based in mortality expectations and statistical analysis. What is mortality expectations? Well, it's data that allows you to estimate how long you'll live or how soon you'll die based on your health. Now, we all know that the one guarantee that we have in life is death. So, while your family can be financially relieved by the benefit of life insurance when you die, you don't have to break the bank paying for the protection. And here's why. The number one way to save money on life insurance is to buy it when you're young. Whether you need it or not, just get it, even a minimal amount, because it will cost more as you get older. And once you have it, you're locking in the premium. Some of my more mature clients, what they'll do is they'll buy a policy for their children for $50,000, $100,000, or $250,000, whatever it is. And they'll pay for that premium until the child has a reliable job and it's an adult, and they can continue to pay for the premiums themselves. The beauty is that they've locked in that rate for that child. So, mom and dad, if your kid's getting married and you don't know what to get them for their wedding gift, consider a life insurance policy. Another way to save money on life insurance is to quit smoking. Smoking is a lifestyle habit, a risky and a yucky one. Usually, if you smoke or chew tobacco, your life insurance premium cost typically doubles. And it's not the insurance companies trying to penalize you. But there's a lot of statistical data that shows a link between tobacco use, health issues, and disease that can lead to death. So you're not just hurting yourself, but you're also hurting your pockets. Unless you choose not to get it in the first place, which means you're now penalizing your family and survivors for, well, your vice. Also, losing weight can help you reduce the cost of insurance at any age. And it has nothing to do with how you look, it has to do with maintaining a healthy weight. Your build can affect your health, and insurance companies have data that shows that being overweight or underweight can lead to disease and illnesses that will lower your life expectancy. And even if you feel good or look good, it doesn't mean that your risk of death is minimal. After all, death is the most uncertain thing because you don't know when it's going to happen, but it's also guaranteed. So, I mean, you know it's happening at some point, which is weird, by the way. Now, proceed with caution because I am going to get a little personal here, but I'm going to do it respectfully. Please do not use this as an excuse not to get life insurance. Seriously. I mean, don't say, I'm going to wait until I quit smoking or I'm going to wait until I lose weight to apply for insurance because you can't choose when you're going to die. And even if it means paying a little bit more now, I beg you for the sake of your loved ones, get it. Patience is not a virtue when it comes to insurance, and time is never in our favor. Remember, the reason you're paying more right now is because you're at a higher risk of death. And that doesn't change the fact that your families need this benefit if you passed away, even if it's a hard conversation to have or hard to accept. I don't want you to be frustrated about the things that I'm saying. Instead, I want you to be motivated about taking care of yourself and your health because it might help you save money in insurance. A lot of insurance companies will reevaluate your rate after 12 months if you've improved your situation, whether it's you quit smoking or you lost weight. I know this because I have a handful of clients that I actually helped get through this process. They either quit smoking or lost weight, and they went to their regular doctor's visits and recorded that lifestyle change. And we were able to come back to the insurance company after a year that they took out the policy, and the insurance company actually improved their rating because of that change. I love disability income insurance for the last of this Keaney Desk Talk on purpose, being that it's my specialty. So you should know that disability income insurance costs about 2 to 3% of somebody's income, and it'll probably produce about 60 to 65% of somebody's annual salary. So for instance, let's put it in numbers. If somebody earns $90,000 a year between salary and wages, it's roughly going to cost them between $1,800 to $2,000 to make sure that they will still get between $55,000 and $60,000 a year in income if they became disabled. For a lot of people, the $1,800 or the 2% is very much worth it as a premium to make sure that if they can't go to work because they're injured or they have a disease that is debilitating, that they have a policy that will go to work for them and they don't have to rely on Social Security disability alone. Let's say you're applying for a job. Company A offers you a position that pays $100,000 a year, no benefits. Company B offers you that same position at $98,000 a year, but they're going to give you a benefit that says if you can't work due to an illness or an injury for an extended period of time, you're still going to get $60,000 in salary for the year. Which position would you take? Most people would say that they can live without $166 a month of income, but they cannot live, or it would be catastrophic for them if they had no income coming in and they couldn't work. So even if your employer doesn't offer this kind of plan or protection for you, you can do the same thing with a personal policy, a private disability income insurance policy. You could pay the premium, whether it's $166 or whatever it is the appropriate rate for your salary, and protect yourself and protect 60% of your income to make sure that you can still pay your bills. I'm explaining this because I want you to understand the logic behind this insurance. While nothing can actually replace your job, especially if you love what you do like I do, you can still offset the loss of income that you would have and would be devastating for you. If you lost your income, you probably start accumulating debt, and that would affect your credit score. And remember when we talked about how your credit score can affect your car insurance rate? You get the point. Everything is always connected. Now, there's ways on saving money in this kind of protection, and I'm going to give you some tips that I've used with my clients and even myself. When you buy long-term disability insurance, which means that the disability is lasting 6 months or longer, you have to choose a waiting period or an elimination period. That is a time frame that you have to be considered disabled before your benefit kicks in. Now, the most common option that people pick is the 90-day elimination period. However, if you're a high earner or you're a really good saver, you probably have a couple of months saved up for emergencies. An option to reduce the cost of the premium would be to select a longer elimination period, such as 180 days, for example. That way, you would save money on the premium, but your emergency fund can actually supplement that gap of insurance there while you're waiting for your benefits to kick in. Also, consider choosing a longer elimination period to save money on costs if you have short-term disability insurance through your work, because that policy would pay you while you're waiting for your individual policy to kick in, and you still save some money on the premium cost. Paying the premium on a semi-annual or yearly basis instead of monthly can also help shed a few dollars from the premium cost. Everybody likes having upfront money, and insurance companies are no different. They know they can make interest on that money that they got up front, and they're willing to give you a discount on the rate just for that. But don't worry if something happens before the 12-month period ends, because insurance companies don't keep unused premiums. They'll pay it back, and that pretty much applies across the board. Another way of saving a little bit of money on disability income insurance is many people belong to professional organizations, and those organizations will partner with insurance companies. Insurance companies will give a discount to their members so that they can buy disability insurance through them. And that is a really good way, even though the plan is not always good for everybody, it's a good way to save money, and the savings on that discount can be very significant for some people. Regardless of what insurance you're looking to buy, I recommend that you work with an independent agent because they don't represent just one insurance company. Agents want your business. So they're going to narrow down the search for you and really shop those rates around to earn that business and keep it. That's why I recommend working with somebody like me who can narrow down the search with expertise and pick something that best fits your needs. I know that if I do the right thing, I'll make you happy, and you'll tell your friends that I made you happy, and I'll have the opportunity to spread happiness. Because after all, sharing is caring. Thanks for watching.